Paramount sued Warner Brothers Discovery, disclose information to help investors make a more informed decision, essentially threatening a proxy fight, saying that they're also going to nominate directors to the board. For more, we're joined by Bloomberg Intelligence media analyst Geetha Ranganathan. Geetha, this seems to have kicked things into high gear. I think it's fair to say that they are threatening a proxy fight. Is that enough to bring Warner Brothers Discovery back to the negotiating table?
Yeah, I'm not so sure, Danny. I think at the end of the day, the Warner Brothers Discovery Board, as well as the shareholders, are really looking for Paramount Skydance to sweeten the offer. So the $30 per share bid, I mean, the reason why Paramount is really standing by its offer is because of this whole controversy around what the stub value of the global networks business is, the TV networks business. So remember, we already have about a $28 per share offer in place from Netflix for the studio assets. The remaining part of the business, which is the TV network business, that is what is causing all of this, controversy and all of this questioning, with Paramount basically arguing that it is worthless. It is worth zero. That's what they said in their letter last week, and which is why they're now suing for additional disclosure. Meanwhile, we know that Warner Brothers board has internally kind of thought of about a $3 to $4 per share value for that TV networks business. And that's really what it's all kind of coming down to. But the last we heard, Danny, is that only about 2% of the Warner Brothers Discovery shares were actually tendered. So definitely shareholders are going to hold out, in my opinion, for a higher offer.
I heard you on, I think, Business Week, kind of giving us the basics, or Carol and Tim, the basics about how much debt Paramount would have to take on, even if it doesn't raise its offer, and what it's going to actually be making in terms of free cash flow. It just doesn't seem to be feasible.
It doesn't, and that has been the whole argument from the WBD board. They called this, in fact, one of the biggest leveraged buyouts in all of M&A, and basically pointing to over $50 billion in debt. I mean, this is for a company that has only about 13 to 14 billion in market cap, comparing that to Netflix, which has about 400 billion in market cap. So really huge difference between the companies there.
Yes.
And then if you kind of look at the pro forma, it's going to be 7 times levered. So that is just massive, man.